and we're going to talk about when to inventory items. A couple things to keep in mind about when we're dealing with record books and anything else, and dealing with inventory right now. We're talking about a fiscal year. Fiscal year runs from January 1st to December 31st. Okay, and that's mostly in all cases, and it corresponds with the IRS, tax time. Okay, now there are other incidents that, like government schools, seasonal businesses may have a different setup fiscal year because of what they do. But for this purposes and for most businesses in the United States, we operate from January 1st to December 31st for the fiscal year. Now, talking about inventory, on January 1st is called the opening inventory. Opening inventory is starts January 1st, so it opens up everything brand new. So everything starts the year, so like opening the door. Closing inventory happens when you close inventory off. That means you've done your checking of your inventory, you have the values on it, and you know exactly what you have at the end of the year. And that's important for tax time, but that's why they call it closing inventory. Now, at that time, now remember too, then that ends 1 year. Then when you open up the next day, January 1st, all you do is take December closing and you move that to the opening inventory. And so that's how that cycle works. So this is a real simple idea about a beginning inventory. Some people call it starting inventory, but most common is beginning inventory. And you notice that there's a date on there, the quantity, how many items, description, so you can tell what you're looking for, a unit cost, and then the amount. And those things, the first one is known as consumable inventory items that the business uses to whatever they do, to use cotton balls. The truck is more of a capital inventory item, so it has a little bit higher amount on it. Any kind of new items that comes into the inventory needs to be inventoried as soon as possible, so that you know exactly where the business stands. Also, if it's a large enough item, which is mostly over $100, you have the insurance policies gives you some time, leeway of 30 days to make sure you report that. And the reason why that is, of course, is in case anything happens that you file a claim on it, and that your inventory proves that you have it on your inventory. You want it to be consistent over the years. Depending on how you do inventories, there's some businesses that does inventories daily. A lot of retailers will do their daily. Some will do weekly, monthly, quarterly, more for the everyday business, you may say, service industry will be quarterly, and then yearly is a must you have to do, so you know exactly where you stand in inventory. Remember that we talked about what to inventory, and anything of value owned by the business or individual is considered an asset and is considered to be put into the inventory. Okay, so any kind of assets to be sold there on hand at the time. If you sold an asset, you will take it out of your inventory, and then that would be reported in another record. But understand that keeps the inventory current, and we talked about current last time. So on hand at the time, so it could be market livestock or animals that you keep for over a period of time, crops and plants on hand, products that you may own for the business that needs to be sold or produced, depending on your type of business, and items of value, anything of value that you need to put on your inventory. Consumable supplies, usually they use for a normal production cycle. So basically, if you need chemicals, you use it up during a period of time, usually within the 1 year. Fuel is considered to be consumable supplies, because a lot of times businesses may be buying in bulk a lot of times. They want to make sure that's inventory and keep track of that. Replacement items like tires, for example, would be something you replace on your machinery or your vehicles to replace. Seeds and fertilizer all are consumable supplies that are probably used up during the time period, so they're known as consumable supplies. And supplies and materials are used in the production of something. Capital assets, usually we deal with ownership with more than 1 year of life, usually when you say capital assets. So breeding animals, machinery, equipment, buildings, land, all those things you're going to hold for more than 1 year. And so those will be considered capital assets. And that's the end of part 2, and we'll see you in part 3. Okay? Thanks.